All right. We're back at it again. Welcome, everybody. Bitcoin Brandon here from Los Angeles, California. Early morning crypto talk. It is 9:45 a.m. here in California. So good afternoon to those of you on the East Coast. Go ahead and type in the chat box where you're listening in from. Patty Moore from Hawaii. Aloha. Abdul Wilds. Shane West. Shane, I got to say, I'm getting a little bit impressed. I've seen you plugging in. You've been in all the lives. You know, you want to know what's going on. That's what I'm talking about. Shayna Robinson. Bouger. Latifa. Darnell Abrams. Moshe Frazier. We got Philly, Oklahoma, Delaware, California, Texas, Hawaii, all representing. Tracy Kubish. Mr. Stewart from New York City. Tracy by way of, Jersey by way of Mississippi. Lorna Vasquez. James Jones. James, we're up in 45 minutes. Got a three-way call with James. Sharon Landry, Hawaii. Marty Bali, Victoria, Texas. As a disclaimer, I'm not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to move into. There's 4 rules I live by in the crypto space to have success, and this has served me very, very well. Rule number 1, crypto education is key. It is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. That way you eliminate your risk. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What vehicle are you using to make it happen? Make a decision, take action, and remain focused. Do not get distracted. There are so many things out there in this crypto space that are great. You can't be a part of everything. Now, following this is not going to guarantee you success, but it will at least limit your risk. And mark my words, there is risk. And that, ladies and gentlemen, is the most that we can ask for. All right, so let's get ready for some news. I'm not going to be long today. I know I am starting late. I am doing daddy duty while my wife is traveling. So there's things I got to take care of. Plus, I've been on the phone. Plus, I haven't slept. I haven't slept in a couple of days, meaning real sleep. couple of hours, cat naps here or there. And you all will realize very soon why that is. What am I so excited about? What's taking place? And where is my Bluetooth? There it is. If you ain't excited, you better get excited. All right. So I got my screen, should be sharing. Let me go on my other computer and take a look. We're going to talk about something interesting happened last night while I was doing crypto talk. Wait, what? You did a crypto talk last night, Brandon? Yes, I did. It was members only. It was just for those that are in KGX, members only. And we talked about how to read CoinMarketCap, but what was very interesting was when I started it, this number was at $219 billion. And I said, when I first look at the chart, the first thing I look at is this top line right here, this number and this number, because it lets me know, has new money come into the market or has money been taken out of the market? And just by knowing that, I could predict what's about to happen or what's going on down here. Now looking at this, what will happen last night, it was at 219. So since last night, it's lost $5 billion out of the market, which meant the whole market slid by $5 billion. See the downturn here? Look at the last 24 hours change. Everything's in the red. Ripple's down 6%. But Tether is almost flatline. Almost flatline. So I really can't tell at this point if the market has flattened out and people are pulling money out, or if people pulling money out of Tether and moving it back in the market, or if they're still putting money in Tether. This is something I got to watch for another couple hours to be able to have this accurate. So the market's in a slide right now. The last 24 hours, Eternal token's been 46% up. That's almost like a pump and dump. Let's see, Wax, Decentraland, Chainlink, basic attention is still up. Now that is impressive. It is still riding up despite what the market's doing. Golem, PoonDX, although it's having a slide from where it was at last night. Polymath, NXT, Revane, Zeliqua, the worst performing coins. Eternity, Dogecoin, Ripple, Litecoin, Loopring, Bitcoin Gold, Electronium. Dang, it's that back down to 1.5 cents. Ravencoin, Maker, Bitcoin Cash. So what's catching my eye is Bitcoin Cash and Ripple. They're more than around 5% loss over the last 24 hours. That caught my attention. Digibyte, Steam, Cardano. That catches my attention too, Cardano. Ethereum. But while I was doing the live, it went from 219 to 217 last night, and the market went from being in the green to being in the red while I was doing it live. And I didn't know why at the time. So, of course, in the morning, which is now, we're able to see what happened. Why did the market do what it did? So this is from 3 hours ago. What caused the sudden drop in SegWit blocks on Bitcoin? So let me put that in the chat box. Okay, what caused the sudden drop? Blockchain detectives and Lightning proponents may have noticed a severe drop in SegWit blocks near the end of last month. Well, that's last month. I'm more concerned about last night. SegWit spending transactions had reached a high of nearly 50% of all transactions, according to this trade tracker. But around October 20th, the rate began to drop off, hitting a low of nearly 40%. I think that's because of Bitcoin Cash. They switched from Bitcoin to Bitcoin Cash, the miners. Users who noticed might have been mystified
If those many people were previously spending SegWit-enabled inputs, why would they suddenly stop? SegWit transactions generally cost less as they are smaller in actual size, and therefore it is less expensive to send them with priority. A Bitcoin newsletter familiar with the deep technological aspect of Bitcoin has a theory that makes sense. And SegWit just stands for segregated witness. It's like the verification process. At least one major mining pool accidentally stopped processing the transactions. How does that happen? You accidentally stop processing. A simple explanation for this sudden decrease and rebound could be a minor misconfiguration. By default, Bitcoin Core does not produce SegWit, including blocks, in order to maintain get block template. This is all a bunch of nerd talk right now, so bear with it. Get block template compatibility with older pre-SegWit mining software. When miners change their software or configuration, it's easily possible to forget to pass the extra flag to enable SegWit. To illustrate how easy it is to make this mistake, the example below calls GBT with its default parameter and its SegWit parameter, and then compares the results by the total potential block reward. Okay, this has absolutely nothing to do with what we actually care about. Go ahead and read the rest of this if you guys are interested in the technicality of how the system works. You know, that's not me. I can care less as long as it works. I don't understand how a plane flies as long as it gets me from LA to Chicago next week. I'm good. I don't need to know how it works. Anyways, they say it was an accident, an error. Let's go to, not that one. Yeah, this one. BTC faces bearish reversal as dollar strengthens. So we just had an election, and the market reacts to elections. So after this election, the dollar has strengthened. And it had an effect on Bitcoin, according to this article. Let's see. The Bitcoin to dollar exchange rate has dipped close to 1% on Thursday, now trading at 64.70 fiat. Really? It is at 64.44, okay. The outcome of the U.S. midterm elections, there we go, with Democrats sweeping a sharp win in the House, had certainly shaken the U.S. dollar yesterday. The greenback, nevertheless, I haven't heard that term in a while. I'm going to have to start using that. The greenback, nevertheless, sustained its overall bullish momentum ahead of the Federal Reserve policy meeting today. It looks to hold on to its crucial supports owing to optimistic wage, price, and labor market data. Bitcoin, at the same time, could find it difficult to push through its critical resistance areas if the dollar remains strong. The BTC USD trading pair is already hinting at bearish correction action upon pulling back from the 100-period simple moving average. Let's have a look at the following daily chart to understand it further. Okay, this is what we were not able to do last night. Look at one of the exchanges. I don't know what exchange they're looking at here, but let's take a look. So you see the downward trend, you see the Bollinger bar, all pointed downward. 64.70. What time frame? Oh, so this is going by month. August, September, October, November. We got to zoom in on this to see what happened here. But I see this trend. The bold curve depicts in blue, and sky blue represents the 100-period SMA. So, okay, this one. So I went, ooh, I see it. Has tested it as resistance on 3 separate occasions recently. So 3 separate occasions recently. How far are you going back? May 1, 2, 3? Or are you looking at here? 1, 2, 3. goes back to, yeah, October, mid-September, October. 1, 2, 3, last night. Okay. So 3 separate occasions recently. The current pullback action also visibly originates upon testing the blue curve on daily charts. A medium-term descending trend line is also capping the upside action, therefore intensifying the selling sentiment that is already there. The RSI momentum indicator, in the meantime, has undergone a breakout action after invalidating the upper trend line of the descending triangle formation. This uptrend is more visible in the lower time frame chart, so let's have a look at the 4-hour candles. Okay, so this is 4 hours. So now we're zoomed in. This right here is a zoom in version of this, so you can understand this. So let's take a look here. What are we looking at? What's the time frame? You're not giving me a time frame. So based on this, it is mid-October to now. Oh no, oh no. We're talking here, this area. So that is beginning of November to now. 6,400, 6,300, 88 was the low. I didn't see it get that low. The high was 6,400. This is, although they're basing this off of Coinbase. I don't base off Coinbase. 6,486. Down, 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 flatlining. But this trend, after it hit the blow here, is steadily going back up. So you see here on the big chart, we see a downward curve. And this is what they mean by the triangle. Like it's reaching a point. See this breakout here? It broke out from the top line that's curving down to start a new trend, an upward trend. I hope I'm making sense. I know I didn't cover this last night, understanding how to read this, but you're able to follow the trends here. So even though it hit bottom here, 6,300 or so, it's still trending back up. And it can keep doing this. And then when it talks about resistance levels, it hits a certain point because there's the sell wall is bigger than the buy wall. And that resistance point right now is around 6,600. And it's going to have, you need to have the buy wall be much bigger than the sell wall to push past 6,600 and go up to the next resistance point. And the same on the low end. The buy wall is down probably around $6,400 and it's not going any lower. So it's bouncing around in between that point. All right, we are forming a rising wedge pattern, which typically results in a large downside correction from the top. That said, we are now retesting the top line resistance of the wedge. That's what this means right here. So this is the top wedge. When you look at this, you got this top wedge, you got the low wedge. It is testing the top wedge again. And it can go either way. This is when you got to watch it. This one line here, it can bounce all the way back down again to continue this downward trend. We are pretty much placing our positions according to the levels inside the rising wedge. But what that means there is they're predicting right now, not based on this big chart, they're basing it off of this little chart, placing their bets, in other words. That said, a pullback from the top resistance trend line will have us enter a short towards the lower support. So in other words, here's what they're saying. If this sucker hits this line and then starts to bounce down, they're going to bet on the low end instead of it going high. This is why when you know what you're doing, you make money when the market goes up and you make money when the market goes down. In fact, the best traders make more money when the market's going down than they do when it's going up. How's that possible? You got to learn how to trade. So that said, a pullback of the top resistance level has us enter a short towards the lower support trend line, and a bounce back from the lower support will allow us to enter an intermediate long position towards the descending trend line. In other words, what they're saying is they predict if this bounces off this line, it doesn't go higher than the 6,400, because look where 6,600 is. So they're going to look at it, it's not going to even get near that. They expect it to bounce all the way to the bottom and then have a long-term rise up. In other words, they're going to wait till it hits down here, and then they're going to buy a gang of coins and ride the correction wave up. They're telling you this right here. On both positions, maintaining stop orders some 4 pips opposite the direction of the price action defines our risk overall. What does that mean? Well, instead of having to stare at your chart all day long, you can actually put in stop orders on your trades saying, I expect it to go up, but if it keeps going down and it if it hits 63.80 or 63.90, then the system will automatically sell the position automatically to prevent further loss. So you don't have to be looking at your chart every 5 seconds. It just does it automatically. So that's what they're talking about, their stop losses there. So let's see. As we enter a short, we will maintain a stop loss order just 3 pips above the entry point to minimize our losses. See that? Should there be an unexpected bounce back action, because this happens fast. You saw what happened last night. Within 15 minutes of me doing the live, the market went crazy. A breakout above the descending trend line in black will have us enter a long position towards 6,600 fiat. So here's what they're saying. This is their bottom, 6,200. They believe that it's going to bounce down to at least 6,200 before jumping all the way back up to 6,600. Do you know what profit margin they're going to have going between? That's a 400-point gain. 400-point gain. If you've got millions in that 400-point gain, you just made a freaking killing. They're preparing for it. They know how to read the charts. So yeah, the stop loss. Okay. We are pretty much placing our positions according to the levels inside the wedge. That being said, blah, 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 long position towards, let's see, okay, bounce back, 200 period. A breakout above the descending trend line in black will have us enter a long position towards 6,600 fiat. Our primary upside target for our intraday strategy. This is their day trading here. They're trading, the market trading sideways. That's what they're doing. So they've got a day-to-day strategy on how to make money on 200, 300, 400-point swings. A stop loss just 2 pips below the entry point will define our risk management outlook. Trade safely. So this is why knowing how to read the charts can make you a whole lot of money, and failure to be able to understand the charts can cost you a whole lot of money. If you're looking to play this game like they're doing in the short term. Long-term guys like Winklevoss twins aren't day trading. They can care less about what the even price of Bitcoin is right now. They're playing the long game. So while we're looking at Bitcoin from day to day, they're looking at it like this. Let me show you. So go back to CoinMarketCap. They're looking at it from here. Year to year is what they're looking at. And they fully expect the coin to jump over $100,000 a coin. So all of this little stuff here, they can care less. So that's what we're paying attention to right now. All right, that was it for this morning. If I do a late night crypto talk, and that's difficult because I gotta feed my kids, and I don't have my wife here, so I might not be able to do late night crypto talk because I got to do the presentation, KGX presentation. But I did want to cover this article, Roger Ver finally realizing he might be fooled, by Craig Wright. CCN has some articles I was looking at. 5 arrested in South Korea for injecting crypto mining malware. Bitcoin mining consumes 3 times the energy of gold. Bitcoin Cash drops 5%. Let's see, what is that? Santa Claus. Why Bitcoin is primed for a Christmas surprise. Really? Okay. Let me save that for later. Bitcoin market still strong. Then there's this one here I found interesting. I haven't had a chance to read. Coinbase's CTO says crypto is becoming mainstream in tech firms. That's a big deal. That just means they're building the infrastructure. All right, that's it. Ladies and gentlemen, hope you learned something new. As always, that is the point. If you want to continue your crypto education, then you want to come back 9 p.m. Eastern, 6 p.m. tonight. That is 8 p.m. for those of you in Texas on www.kgxglobal.info. Tonight, we're going to go over why KGX is here to teach you about crypto. So, all right, everybody, have a great day. See you all later on tonight. Bitcoin Brandon out. Bye-bye.